Good morning and welcome to the Breakfast Club. My name is Darren Hancock and it is Friday the 15th of December. Only 10 days, people. We're on the countdown. Not many shopping days left for y'all if you're a little late on your presents. So here we are on the 15th of December, Friday, and looking for the last little bit of Christmas funds. Let me just get on my usual site here to see if we're up and running. And let me just confirm. There we are. All right, we're up and running here. So where are we sitting for today? This is the dollar charts on NASDAQ, S&P 500. I'll kind of just blow through these real quick here. So Dow Jones has made a new higher high today. Yesterday made a higher high. Today made a new record high. We have S&P 500 has not returned to this old high here. Yesterday was a high. Today we haven't reached that yet. So I was probably looking for a return back down to this fair value gap. If we continue to run back up again, I'd like to see today drop back into the top of the fair value gap, maybe dip in and just tag the top of this old high here. Leave the rest open and then return back up next week. Unless we just wick down there, grab that, and start to move back up again. Depends on how active it is today. It's a Friday. Guys do a lot of profits, so maybe it's a TGIF Friday. We have a retracement back into the weekly range. NASDAQ. NASDAQ has broken through this old high here. And we've come back and retapped the old high. See that? Here, and then continued up. We have a small little fair value gap in here. On the daily, I don't see a lot more other than either more upside here, take out this old high from yesterday, or return to the bottom of this fair value gap today off of yesterday's low. We're in the middle of those two, that's why I can't give you a definite up or down. So we're definitely bullish. Making new highs. Obviously the lean is towards bullish. Let's look for let's look at the 15-minute here, get ourselves some bearings. Asia yesterday, so we have a return to the lows, come up, didn't quite take out the London highs. Those are equal highs there. We did do the big run down, did not fill the fair value gap here on the New York PM session. reversal for the PM session yesterday. That's 1:45. That's the 2 o'clock shenanigans, the afternoon session. So let's just look here for the afternoon session at 1 minute. I'm just curious to see if you guys could have got your afternoon silver bullet entry, so you know what you're looking for around that 2 o'clock mark. There's 55 there. Here's your 1, 2. There's your 2 o'clock candle there. Silver bullet is right here. You come back up and watch this candle right here. Right on the edge. You take that right there. Zero drawdown. That's why you either take the top, the middle, or the bottom. Your choice. If you're going to put your stop loss, you have to put it below that candle here. So calculate the difference, the distance between where your entry is and your stop loss. Calculate the pips or handles difference, and then make sure you make, if you're only trading 1%, you determine your lot size by that. Reaching for these highs, that fair value gap, each one of those specific PD arrays, old lows, then you would have caught a nice nifty little run there. Okay, so there was a silver bullet there yesterday afternoon. We're in the middle of this range pretty much now. We're in a little bit of the premium of that range created yesterday. Order block, we broke it above it now. So if we could return into this fair value gap here after this consolidation has been taken out, we've taken out all the liquidity down here. We come back, find some support at this, look for further upside. Equal highs all up here. So if we're looking for pushing higher prices, see if we can't take out tomorrow or yesterday's highs. Get back into this consolidation for a run back up. So we want to see a big bold candle come up here. I want to see a body break through all this stuff here. Then return to either the wick highs or the bodies. You can come back into 50% of that, that's fine. Leave this piece open here. You got one little fair value gap here, which is now an inversion. I don't want to see this breaker get taken out. So if we get a return back to the top of that, which is also the fair value gap, it's going to get created here. And you get the next 15 minutes, look for a return to the top of that for a potential run. I'd like to see this one give me a body above these candles here though. Relative equal highs. You have a small little pocket down here still. We have equal lows. Order block. So we've broken off this order block here. We've run the lows off here and here, breaker, return to here. Do we get some resistance off of this and return back down? Look for a return even up to the body here, which is inside this consolidation before turning and going back down. Unless they drive through this, then you look for these equal highs. But I think this candle here, high is 36.50. 35.50, so we did go above it right there in London, just after London session. We took out the highs and then quickly ran down into a discount range. Catching all those people that are trailing up. We've hit the bottom of the breaker. Not reacting off of that, so on the 15-minute, kind of a catch-22 here. So this whole range, %. See how we hit 50% there? So we're up in that premium portion, hit the breaker. We have to start digging down below that. So that little fair value gap I mentioned here is right at 62%. That's the complete fill, and it's also the down candle here. We're at the top of it, so that's my next objective. Off that breaker there. I think I might go short here off that. I think I'm going to go short there. Let's look at Dixie here. Oh, we did hit the 101.93 on Dixie. I was calling for that yesterday. I must be on a different time frame. I don't know why I was picking that, but it looks like we hit it perfectly here. The bodies of the candles respect that number right in there. I'll have to go back through my charts and figure out why I put that 101.90 there, 93. But we've obviously got a great reaction off of it. Come back into the breaker. We're hitting the breaker here as well. So if we get down, if we go down from here, we have more upside on the Forex market. So if we get some support off of here and this breaker here, we may still have a bit more upside, but we're hitting the mean threshold of that breaker, that 2 candle breaker there. If this holds and that order block holds, that breaker there holds, then you're looking to return back down lower. This could be a significant drop in this. Let's look at the 15-minute here. And this is going to be delayed probably by one candle, I think, because for some reason I don't have ICE futures. I don't have any of that stuff for data. We've hit yesterday's open, midnight open. So if we hit that breaker on the daily already, which is right there, and we're reacting off of that and coming back down, that may be the high for the day. It might be out a continuation on the downside. We've come back to this breaker here. Run below this low, these lows. We've come back inside that one as well, right on the money. So we have to get through. We have to get on the other side of this fair value gap. Oh, sorry, this breaker. I think that's the breaker we're talking about on the other one. Want to get through that on the other side of that, find some support at it, and continue on the downside. If this decides to, we lose this candle here on the 15-minute chart, and we get here, we get back on top of it here, then we find support, then we're looking for further upside prices. But right here is with a 15-minute candle. It's where I base that opinion on that. I won't say higher or lower, or sorry, I won't say higher until I see that order block get taken out. Oh, that breaker there get taken out. And the breaker on the daily. This guy right here. Didn't quite tag it yet. What's the low on that candle there? The low on that candle is 102.55, and the high on this candle is 102.54.5, so it's like 0.05 of a handle, or 5 handles to get there. So if we push up again, look for this guy here to hold price. You've got anywhere inside there that could run up to. So even if we have a bigger upside day, got to lose this guy here for me to start thinking we've turned to a bullish trend for the meantime, which could take us well into this fair value gap here. So I guess technically you can have an update today, all inside this breaker, but I don't want to see all 3 of these PD rays get taken out with a one-day candle. Up to this price imbalance right here is the body. So maybe we'll get one more push into here. I don't know. Like I say, you got to see that. I got to see that 15-minute. Was the 15-minute, or was that a 1 minute? This guy right here. Yeah, that one got taken. You find support on top of here and keep pushing up. Equal highs. Gap. That could be the run for the day. See, it makes you flip-flop around now. 15-minute. Yeah, we could just be getting a run down into here for a continuation on the upside. We can dig way deep into that 1 day. Let me just draw that out there so I get a better idea. Oh yeah, we got lots of potential upside there. So that's the edge of the daily breaker. We're pulling away from that. It's the edge of this breaker. So we could see a return back to London's high, and then a continuation to the upside. And if we lose this guy, it's just a mitigation block because we didn't break any lows with that. We got a consolidation. We popped up, came back inside the consolidation, then broke out to breaker. So now was that the highest upside objective for the day? I'd like to see it return back into here. If we're going to continue upside, I'd like to see it get back into here before blasting off up there. And we've got quite a ways to go for US dollar. Or if we hold, that holds, and we lose this order block here, we're looking for more downside. If we lose the London low, that's all I got for that one. What's this supposed to be? Why do I have two sets of dollar indexes? That should be let's look at some euro stuff. So if the American dollar does go down, and we're looking for more upside on the British pound, you have equal highs here. We've got a pocket of liquidity up here. There's a swing point here. We do have a break below these guys. We're coming back into that now, so look for that order block there, that 1 day order block to hold price all the way back into this fair value gap here. Or sorry, it's not a fair value gap yet, but if this candle closes on the daily, that'll be the fair value gap that you use to push back up. So if we decide to drift down into here today, or create a small little candle, that would be the end of the fair value gap. Monday, dip back into it, and then Tuesday, run for higher prices. So if we do get an up run into that breaker on the daily again, then we're looking for this to run back into either filling this or midpoint of this bullish candle here. Euro didn't take out the highs. We're quickly getting back into the range. Inversion fair value gap seems to hold price, so if we're just coming back to fill the rest of that imbalance, on the buy side in here. The question then is, what part of this range do we look for retracement? Look for a discount inside this range here. Pull your fib tool from top to bottom. Here, I'll do it for you. 50% puts you right here, so look for a run back into this area here on that range. If we're pulled back into that weekly range, if we stop up here, this is the potential place to us to run in the next week before running those highs out, or we just pull back into this consolidation for the rest of the year. Watch this price action this morning. It's so erratic and destructive. Gonna have to watch further sidelines today, probably, as Larson said, for the rest of the year. Just nuts. 15-minute dollar candles, just like no one's business is gonna move. It's just pure destruction. Have a good day, guys. But I think I'll watch from afar. Yes. Could be very destructive day. This is the time of year where you don't want to be doing a lot of trading, or you're super low leverage. Euro CAD, or the CAD USD, we finally ran those lows out, but we have now relative equal lows still. So if US dollar gets stronger, we start running back up into that breaker we talked about. That means this would be stronger. Into that breaker, I'd like to see no more than this candle here, the body lows, as the upside. If it continues down, and that breaker we just tapped on the Dixie, the daily that we just hit, if that is now further downside, we may see us reaching down into this daily fair value gap here. Maybe a bit of a stretch today, but if this is the market maker sell profile we're in, smart money reversal, low risk sell, accumulation distribution. Accumulation, second level of distribution is your unicorn. We could see this just auger out down into here. This looks like the unicorn setup here for a run back into original consolidation. Even if you take 50% of original consolidation, which I will do for you. I take my little so if you wonder where my numbers come from, now you know. Oh, beautiful. We're calling for New Zealand to return to this high, these highs. Let's come back down to here. Now we're looking for a further upside. I like these upside levels here. This is the December. This could be the December push here now. We have a little dip down into December, and now the run up. Order block yesterday, back into the top of the order block here. I would like to see more upside for this for the day. Is there a oh, this looks like the 2022 setup here. We have a run above the highs, run below the lows, come back inside the order and get short. What's the high on that candle right there? High on that candle is 61,759. 61,779. Oh, we've got 20 more handles to get back here. So that we could get another little run back down into this order block before we finally tag it and leave. I like 6170. $61.69.5. One more run down into here. That might be the opportunity to go long if there's a setup in here on the 15-minute or the 1 minute. We're in this breaker. We're blown through that breaker. Yeah. Equal highs. It came back to the high here. Mitigation or mean threshold. Mean threshold. You're just eating through it here. Coming back. More downside potential here. I see potentially more downside, but I want to see more upside on New Zealand dollar. There's a fog warning. Be safe. Text me, let me know you got there okay. So if you've got your Christmas money in, keep it on the sidelines. If you've made some cash in these markets, then hold that on the sidelines, because this is crazy. This one here is good. Australian dollar definitely looks like it's got a downward trend right now, which would say the American dollar is stronger. So we've got multiple things, that confluences that say, hey, look, if the American dollar is stronger, this guy should drop down. We've got a setup occurring to consolidation off Australian dollar to go down. Australian dollar's already made a high yesterday, so if we don't decide to drip down into here, the fair value gap daily here, this is the potential downside, so that means the American dollar should return a little higher. It supports an upside push into that breaker some more. Okay, that's fine. We're seeing out the confluences on the lower currencies to go down. Japanese yen, weekly highs are still sitting there. We're inside the daily fair value gap inversion now. We're well inside that. We've hit the bottom of it. So if the American dollar goes up again, this should come back out of this daily fair value gap. We should see a wick inside here again, like we saw here. We've come down and tagged that, so we should see this wicking back up. And we got 15 minutes before the start, so I'm just going to see my wife off to work, so I'll be right back. Okay, so here's another scenario. If that Dixie did hit the daily breaker and does continue down, we're looking for this order block here, midpoint of this order block. If this gets taken out, then I'm looking for this little fair value gap down here. But right now my eye goes to that midpoint of that breaker on the daily there. We've come back into the consolidation, the drive up, looking for this on the 15-minute anyway. Hourly, nothing on the hourly. We got 15 more minutes to see if there's a setup in there anywhere. Oil. Oil has returned to this order block low. Well, the potential is for it to come back into this candles. We've hit the top, the open, so I wouldn't want to see it drift into the mean threshold of that candle. I'd like to see it get some lift now and get back into the body here at 73.07. So I'm looking for a little bit more upside on oil to 73.07. If you lose the bottom of that, then look for a return back into the midpoint of that mean threshold of the down close order block. On the 15-minute, you see we have a breakdown below. We've run the lows out. We have a little fair value gap down here on the 15-minute. I don't want to see it return into there, but that doesn't say that it won't. If it does, look for the top of that fair value gap inversion now. If it comes back to, I've got an alarm set there ready for crossing at 70.48. That could be the return to go higher. The top of the inversion. So if we find we broke through with a body now, if we come back, find some support at that. So let me revise my thing. If it does come down into here, I want to see it hit here just before the midpoint. Keep that last little piece open and then run back up. So downside on oil today. That would be in line with this 15-minute here. We have a consolidation. Finally break down below the consolidation with a nice body here. If this creates a fair value gap, look for a return into that, tag these old lows, and then go short. That might be my play today, depending on what happens at 10 o'clock. I might be looking there. Gold, sideways. Silver, still inside its range. It's come back into that order, that fair value gap there. It's returning back into the premium portion of this little range here. Copper, I don't even know why I even have them on there. Oh my lord, look at this. Royal Bank is, the banks are doing really well. They're popping up some really nice profits there. Oh, a nice little tear up in December. Scotiabank's looking for an old high. Imperial Bank of Commerce is doing well. Laurentian Bank always dragging its heels. Dragging its heels in a consolidation, but it is slowly creeping up. These big movers, our big banks, are obviously doing really well. Citigroup down in the States, they're starting to make, they've run above their highs now. Now they got some liquidity up here. I like that. Opening that came in to close that gap. Wick touches it. Now you want to see further upside today. What do we got in wheat? Oh, wheat hit my objective. Wasn't it long in wheat? Or was it corn? I was short on corn. Oh, I must have made money, so I must have made 600. So I must have made, let me just double check. Where was my, oh, right here. There. Oh. Long. I lost on that one. Lost on that one. Corn. Oh, it was corn. There. Oh, they're almost overlapping. So it's just a small one there. Okay. So I'm looking for a further downside in corn. Definitely more upside in wheat. Take out that Asian high. Bunch of ETFs that we have here. They're all doing awesome. It's good. Catch a good seasonal tendency in those, and you can do well. I think I finally got that one taken out. Yes, look at that. Finally. I was aiming for that little fair value gap there just to clear out. I was all underwater. I don't mind admitting this. I picked this one totally wrong. I had to endure all of this underwater stuff. I was pretty sure it would head here, but watched it and waited and waited and waited and waited. Finally came down to my spot and got me out there. Not the way to trade. Not the way to trade at all. But I managed to save that one. So that was the downside objective we were talking about at the beginning of this session. And we hit that. Right off that order block. That's nice. So we have a breaker. We came back to that breaker and hit our discount range. Nice. Well done. And what else have I got for you? Nothing. I got my little piece off there this morning, and order block. This guy here. Let's wait for the 10 o'clock, see if we can get you guys a silver bullet. Not that I'm recommending trading these markets right now. As you saw, I was totally on the wrong side of that one from yesterday. And endured a huge drawdown just to get my one little piece of trade there. E-mini S&P. I do like this old high here. Has the potential run. And we'll put that in blue because it's a daily. But I said I like oil, right? So that's the old low right there. We're just tagging it now on the 15-minute. I do like this one here too. Might have an oil trade this morning. See if I can see an oil trade set up. Mr. T, how's it going, buddy? Looks like just you and me sitting here. Got a couple of other people, but they're quiet people on the sidelines. Even Derek and Lauriston are kind of looking from the sidelines today, which is a safe place to be. We're just out here wandering around in the fog, looking for a setup. This might be the setup we're looking for here in terms of oil. I might just verbalize these and then not actually take them. Since I started this account last month, I think it was, November, we're up 7.3% on it. That's nothing compared to some people I know, but it's more than a bank give you in a month. So we've dipped back into the consolidation. Now here's the run up. So let's look for the 1 minute. For NASDAQ. Well, let me put this on. Let me do it the easier way here. Leave that on 15-minute. Close that up. Go over here and put this on all 1 minute charts so we can see which one is which. Who's going to give us a little bit of action today for the 10 o'clock run? Chop, chop. Dow's in a little choppy state inside the regular trading hours. It's been around the midpoint of that, really chopping away. Equal lows. If it takes out these equal lows here, look for a 1 minute we're going to get a big bold candle down. Taking out the lows, looking for these highs and this order block here. It doesn't take out the low here, so it's a mitigation block. I want to see this one give way. 8 o'clock. Morning, Greg. Swing below these lows. The edge of the trading or regular hours inside a breaker. You're stuck between these two right now. These guys are compressing. They're gonna make a move. This guy's off this guy, and this guy gotta make a move. We're waiting for the break now. Now, some people might say right there, 9:58, 10 o'clock, come back into the silver bullet. I hate consolidations, silver bullets and consolidations. But if that's it, then you're running for these lows here. There's nothing here. Everything looks blurry here. I forgot your auto quality. Make sure you're 1080p on the channel there, because sometimes it does not automatically move to high def, even though it might say that, and even though you might have it on auto, it may not actually move there. So make sure you switch it to high def on the settings in YouTube. Otherwise you'll have it'll look blurry all the time. So we're off the bottom of the regular trading hours gap right here. And we're above the regular trading hours gap in NASDAQ. Just going to check oil again. Oops. What the heck was that? How did that duplicate? Not sure what happened on there. So these are compressing. That's the silver bullet setup. Take it. If you took this one here, is this return into here, order block, run for that low. You just made a quick 37.567. 6-7, you made 33 handles right there. And that may be all you need for a quick little snipe. S&P has to make up its mind whether it wants to do something today or just roll around inside these speedy arrays. Do we have something forming on the 30-second charts? Let's look on the 30 seconds because these guys are fiddling and farting around here. Ask yourself, do you really want to play inside this? It's like running through one of those prickly bushes. No matter where you run, you're going to get scratched up, man. There's a whole bunch of birds in that there bush. You do not want to be running in the bush today. Doesn't this market look like, oh yeah, it's easy. I could trade that. That's a 30-second chart. Choppity chop. Can we smooth it out with a 5-second chart? Ah, yes. Let's go down to 5 seconds and see what we can do in 5 seconds. So, remember, the principles are the same no matter what time frame you're on. Nothing changes. Nothing changes. So this looks a little more this looks a little more like razor wire. This looks like fun on a 5-second chart. You are going for a run on a razor wire. This 10.07. Return there. See, that happened so quick I didn't even see it. There's a fair value gap there. Silver bullet right there. It opens on it. Run for that low. There's 37 to there is 30. There's 5 handles right there. This is why 5-second charts, you got to be super nimble. Premium. Discount. Small range. Look for the 50% of that. It's probably already hit. Yeah, right there. There's 50%. So it looks like it's still in the premium, but that's actually 50% of that range. But the discount is in here. Even though it came down and tagged it, that's the 50. It's good enough. Now we're expanding. But that's what I mean by you only need to get. We got here. We opened on it. Extended the range. Took out your 5 handles. You came all the way back up into a premium. Dipped down to a discount. Ran up. Extended a new premium. Right there, and we'll go down to here, and look what it did again. There, come back down to 50% again, extend the range again. Not so. Let's go back to the barbed wire fence here. I'm dancing on a barbed wire fence. Hey, there's a song there, I'm sure. I'm dancing on a barbed wire fence. I got nothing for you guys. This is shred your shorts on barbed wire fence. You can't even climb this one. So you start seeing some price action evening out here. I got nothing for you. You might as well pull out the dice and start throwing craps. What are we at here? 10. Okay, so next couple of minutes, we'll see what we come up with. Next couple of minutes. Big candle down here. Good. Hold that right there. We get back into, if that holds, you get back into there to run these lows, and then get back into that. Is that, what's the low on that? 780. Oh, so that came all the way back to the order book. There is no gap there. Okay, so yeah, not a body, just a wick. It's good though. It's good practice being inside this. You got to see those. You got to know when to not trade in days, as well as when to trade in days. This is why I don't like wicks below the lows. Wicks just runs on liquidity for higher prices. Now, we said that we like NASDAQ to go higher. Take out that high. That might be their objective for the day. I'm just checking oil here. Continuing on the downside. Did we get quite to that breaker? Not quite to it, so we're still continuing on the downside. Let's get on back to these guys. Yeah, it's so equal highs. %50 of that range. Expansion. Or turn into that little fair value gap there. Then you continue going into that sideways stuff. This is totally a barbed wire fence here. Don't even touch that. Of all the price action right now on the, oh, there's a 5-second. No wonder it looked good. Oh, here we go. Back to a barbed wire fence. I'm sure there's trades in here. This would require a lot of focus to get down into a 5-second chart and look for some sort of setup, of which my brain is not prepared to go hunting for it for today. That looks just too messy. It doesn't look clean enough to even try and engage the markets for even a 1-minute chart. So if you're taking a 5-second entry, be quick and look for just the most immediate high. You'll be literally getting 5 handles at a time out of that. Out of a huge market, you're going to haul 5 handles. If you want to take on the risk and do that, have at her, folks. That is not a market to participate in. What's the old Dixie up to? So we are getting a pullback off the midpoint of that breaker. So, breaker. So if we do get this continuation on the downside, that means these all guys will rise up. And we're looking for these equal highs to get taken out anyway. We're back into this order block here. There's a swing point there, so that is a technical breaker. You run a swing point. Now you got these equal highs up here. Come back inside that order block there, breaker. You get some support off of that now to run back up on the daily. We do have this season or session New York Open in sight. Of the daily candle. What's that daily range right there? Okay, so if we're on the daily range already, and we go from here to here, we're at 50% of the daily range now. Coincides with the top of the order block. Your fib tool is there. So do we hold? We just dipped below that, which is all you need for the algo to run to 50% or just above or below it, depending on where the directional bias is. So to continue on the upside, we got to lose those two candles right there. If you lose the midpoint of that candle, take out those highs. That will be our run on these. So breaker, down close candle before running above these highs. We get back into here, breaker to breaker. That might be your trade for the day, just trading inside that little range on the 1 hour. So that also coincides with the daily open or New York Open midnight candle. So look for downside to here. That's 26.47. So almost 100 pips for the day, inside 100 pips. 91 pips. See another fill of this fair value gap right here. Look where it tags. Right off here. So that breaker there is the important one for me. You're inside you're at 50%, so you can either continue up or come back down, dig deeper into this, go right to the rejection, or sorry, right to the breaker here. This is 1 day. I don't want 1 day, I want 15 minute. That's good execution on a downward. Oh, we got an alarm go off here. We just crossed something. Oil. We did finally come through that oil. There you go. There's the call for oil today, the downside. Once again, I was not participating. This 1 hour repeating itself. 1 minute. There's the displacement down below the low. Come back up, tag the low. Should have stayed on this morning. Too busy playing around. The other one's trying to give you guys a bigger, broader perspective of the markets, but that's the entry right there, right off that low. As soon as we displace down, come back to it, your short is there. It's easy to say in hindsight, I suppose, but that's a classic setup. Break below a low, return back to it before continuing down. So if you go 10 o'clock, let's look for the 10 o'clock silver bullet in oil. There's 956, 57, 58, right there. 59, 10. Come back inside silver bullet in your short from there. Come back, revisit that silver bullet one more time, all the way up into here. And that, from that candle's low, is 71.77. That's at least 100 pips. It's a whole dollar right there in just a few minutes, and that's huge. When you're playing with these boys, whatever leverage you put on there, you're getting a huge returns on $1. So we're just looking for that to return into the bottom or the top of that inversion fair value gap now. Should have stuck with oil this morning. That was where my thoughts were. I keep coming back to the barbed wire fence and saying, oh look, no, don't even participate in this. Or if you do, let me know in the comments how you did, and if you picked up anything, any trade entries that were worthy. I see nothing even on a 1 minute. Let's stick with oil. Against popular belief, I do like oil. Just because the oil's in a downturn, it's fine. You guys can trade this in either direction. So the algo runs. Just because oil's being shitty, that means nothing to us. From on the grand scheme of things in the world, what oil's doing in terms of its losing value, yeah, you might have to pay more at the pumps, but on the charts, these things look great. Breaker. Break down below these lows. Come back inside that breaker. Break down below the lows. Body breaks the lows right here. Come back up inside the order block. Break down. Look for an old low. You didn't get it. You broke this old low, so you look for this low and that body. There's your low. You're a bit underwater, but you're also inside this fair value gap. Take your range. So always got to use your ranges as well. And I've pulled the range from here to here. So once you break that low, if we get this range forming, pull your fib tool and see what's an area that it could logically return to. So if you pull your retracement on that, you're inside this fair value gap at 50%. So there's a return to 50%. You didn't quite get 62, but you did get 50%. You're short. You can just keep repeating this all the way down every time there's a new swing point. Here. .79% retracement. Look at your 50% inside your order block. 50% puts you here, old lows. 62% brings you back into the breaker to run these lows. 75% optimal trade entry. On the daily, that's a daily candle. Now take that logic and move it all the way down into, let's say, 1 hour. Breaking market structure creates a fair value gap. First entry could be here, midpoint, the high. So that's all you get is the open right at the low, short, return inside that mess, breakdown, fair value gap, return to or the low, the midpoint, which is up here, which you don't get, but what you do get is the low. So you see how these lows play important roles? Right there. Breakdown, low, mean threshold, or sorry, consequent encroachment, and fill. This time you get all of them. Fill, breaker, reject down. So you can see this rinse and repeat on all time frames. We're back up into this order block here, breaker, short. So you wouldn't want to see it break that high. You want to see it start coming back down now. So if this starts to support a new range, because we went further downside into the top of that inversion fair value gap, which we just below these lows, that would be a spiffing little entry. With a small stop loss above. I haven't quite filled that fair value yet. I'm going to jump in on that right there. Stop losses can be really small, so if it does take me out here, that breaker didn't give me any support to run the lows. So I may not get it here, but that's the entry right there, or there, or there. And because it's Christmas, I want this one. And then you have the midpoint of that candle is your line in the sand. Rejection block. Stop loss will go up there. Let's put this on a bigger chart. That's a valid order block now. Just for your own edification, I wanted that. All you needed was that. There's 3 different entries there. If we end up losing this and it ends up coming back down, look for this guy right here. So there's a nice chunk of change in there to collect off of. Now, does that hold right there and start to come back down? Yep. And those of you who took it, you're welcome. Stop loss is really tight. Now you've got 2 different order blocks that have been validated. Come back and tag it nicely. Continue down. I was really trying to juice the lemon here. Trying to keep that breaker. Now, just because this is if you did get in off this guy here, like right there, if you did get in off that, stop loss, I would bring it right to the top of that fair value gap, just under it, just above it now, because I wouldn't want to see that get lost by the midpoint. Guess you can go from there to the rejection block. Midpoint one more time. I want to see one candle come back and just stop right there. Get short. I don't like all these just wicks dipping into here. I want to see a body get in there. I got 20 more minutes. Then I'm done for this session. We'll cut her short during the Christmas season. Next week it'll probably be just again 10 to 11. I might just cut down to an hour. There's no trade set up before 11, because that's before Christmas, so markets are really going to kind of slow down now. And then I'll be taking the rest of the year off until January. I'll probably be popping on just to do a private one-on-one or private sessions there on the Breakfast Club and Skype. But this will be Next week will probably be my last week for the rest of the year. There we go. Now we've hit the midpoint there. Stop loss, if I'm wrong, we'll go just above here. Modify. I want that breaker to hold. If it doesn't, I'm alright with that. Take profit, we'll be back here. Can we not snug these things tighter? Why are they out? Does any of you guys know why they're sitting way out here in the middle of the chart? Can we not pull those up tighter? Is there like a settings? Trading, sell buttons. I don't know why they're way up there. Anyway, you get to see my the trade entry, and we'll see what happens here. So you can see where I entered. Right off that breaker. Bodies are respecting the breaker. Good morning, Off Grid. How you doing, buddy? And I have a new rule for those of you who want to join the Breakfast Club on a private Skype thing. You have to have an email, and you have to have a username. I do not accept these long drawn out, protracted numbers and letters, names, or email accounts. So don't even bother. I had a couple of people try to join into the Skype, and they gave me these huge, massive things, and all I see is just scam. I used to get scam emails like that all the time, where you don't have a distinctive email address, or you don't have a distinctive name on the thing. So no, I deleted them. If they want to come back, they're welcome, but come back with a decent name and a email address. That it's not sitting in some scammable place. It's not more recognizable, then I won't move it over. I might move this to Telegram as well, so if people are interested in Telegram, I'll get a Telegram account. I'll still keep this on YouTube to trade live, but in terms of Skype or having a little private chats, I think Telegram seems to be the safer one to go. So I don't want to lose this order block here now. I don't want to come back and revisit this thing here. So this is where I'm doing. Because it's the Christmas season, I am sucking my stop loss in tight. I don't want that high to get broken, because I don't want that breaker to get taken out. So I'm pulling tighter, not because I'm chasing price. It's just because I want to have a support level, because if I'm wrong, I'm not going to give them a heck of a lot of money, and it's not doing the reaction I want it to do. this order block here. I want to see it blast through this, and as you can see, it's already back. If the threshold doesn't hold, then all you've got is the rejection block, and then I'm out. And sometimes it can just stop on the rejection block. The wicks can stop on that, turn around and come back down. We'll see where this one closes in the next 30 seconds. What are we sitting at 46? This could be a 48 run above. That mean threshold has to hold. Oh, it must have gone up. I keep getting this little alarm saying, well, broker went down. Yep. You should still be in there. I think you're still in there. I don't think I took you out of that group. Participants. Show more. Yep, you're still in there. Yeah, I still have you in there, Bishop. Oh, it's still in there. The trade's still in there. It looked like it closed out because I just started getting these alarms saying the server had shut down. So we're still in there. Now, I don't like all this sideways stuff, so if this doesn't do something in the next minute or so, I'm going to close this out, take a bit of profit, and move to the sidelines again. Usually you want to see it hit this objective and then start pulling down into here, not this sideways welcome to Christmas crap. It'll probably end up running back down there again, but I'm not prepared to sit and wait on it. I've only got 12 more minutes and then I'm done. Gonna go spend time with mom and dad. I hope you guys love your mom and dad too. I hope your mom and dads are still around. Enjoy them as much as you can. Yeah, I'm done. I'm not waiting for this anymore. Come on, I'm gonna take you out if you don't go. See, I would have closed that one out. Right when I closed it out. Look at that, eh? Right where I was about to close that out. Now I'm going to move this guy into profits. So I got $50 guaranteed. See, now you can see why if I'm going to take a trade, jump on when I get out. Because that's when it decides to make the move. So you can see now I'm saying I don't want that threshold to get revisited. It's been hit multiple times. So now I'm not just trying to get profits. I'm just trying to say that's my order block now. We've visited it a bunch of times. I've got lots of order blocks to support it on the bottom half of a consolidation. If they decide to run me out, $50. But we want to see this consolidation hold price now. And continue down into here. And if I could scale out a portion of that, like at 0.5, I'd take out a 0.5 below those lows in that fair value gap midpoint or consequent encroachment, which has already been hit. So I'd like to see that get taken out and start heading in towards here. So as soon as we drop that low, I'd take a portion out of there if I could. Order block. So the thing is, if it goes through the midpoint, then my order block's failing, right? So I've got my stop loss sitting right there if it fails. Here, I'm going to threaten to leave again. How's that? Close position. I'm going to leave. You better give me my money. What you going to do? I'm out. Now watch it move. So $100, $100, $100. That's a price to make, to buy some pudding, to buy a chicken, a turkey for Christmas. There you go. Would have taken me out anyway. Too much sideways stuff. It ran up into here. Also back again, back into the mean threshold of that order block. Not that it means anything, because it's not an order block that breaks anything, so it's not a breaker. But that is. See what we're visiting here is the inversion fair value gap. See how we come up through it, we come back down below it with a body, and come back and revisit it again here. We tap into it. Tap the edge of it. We're tapping the edge of it again. So if your stop loss is still sitting up here, you do not want to lose that candle right there, that inversion fair value gap. So if we're just coming back up into tagging it, which is also the rejection block here. You want to see it get below this again, because now you're back in the middle of it. It's just all chopped. So if this decides to be a run above this breaker, we nibbled a little piece out of here like that just by trading off the breaker, and then the frustration of sitting in this. It's not a, well, there it runs to my premium array, now let's get ripping back down into our discount arrays. No, didn't do that. So when it goes sideways like that, you grab a quick little bit of profit and get out, because that's why I moved all those stop losses down. That's my line in my sand. That's my line in the sand. And if you see it coming back, you think that's still not running down to where I want it to go, I'm out. And that's just a small little nibble where I don't even know what the heck we got the entry and exits there. So we got right at the top of that and here. So from here to here is 71.36. Oh, so it's only like 14 cents. A 14-cent trade. But it's $100. 14 cents. If you had 10 lots on that, $1,000 for 14 cents. Not bad. So even that, you can't. That's the best I could get is a $100 trade off of oil, even if it's something I like. So sideways, wait for a breakdown again. Yeah, this is the consolidation, and I am moving to the sidelines. I've snatched my $100 from the market to buy turkey, and then we're out of here. So sorry, the markets are not doing what we wanted them to do. I'll show you a quick scalp there this morning, and the reason why I do what I do on the trailing side of it. And hopefully you got something out of it. If you didn't, I'm sorry. It's not a great market to be playing in. Let's go back here one more time. Check these guys out. So we have consolidation. We finally nickel and dime our way out of it here. Come all the way back to the top of the consolidation. That's that classic return we talked about many, many times. But I'm not prepared to sit through all this crap and chop just for one little entry there at 1045 to continue to take out this high, look for that high and these highs. Same thing here. Consolidation, which is fine. We like consolidations because when you see an impulse leg out of a consolidation, then a return back to the top of the consolidation, you can get in on it. So we have consolidation, slow weepy weep out of it, impulse leg. We have a nice open fair value gap. You return to it, and you're aiming for old highs. You do have to endure this drawdown again. Through that, your stop loss would have to go down here, and now you're looking for that high there. So there was a trade there this morning, but it's whether or not you want to endure wading through all that chop to get it. That's the dedicated trader who finds that. I wasn't on that. I was in oil when that was happening, so we missed it. Those of you who are watching, I hope you found it and you were able to jump in on that. It was a late morning trade entry, a silver bullet setup at 10:25, the bottom half of the hour. You come back into that there, and that is the cleanest price action you could probably take there. All this was clearly chop on the 1 minute. But with that, I am out of here. Thank you very much for popping in. There's only a few of you today, but that's okay. I expect that near the end of the year. Everybody's going to stick around at home now. Thanks for joining in. Enjoy the festive season. If it's part of your religion, if it's not, then just remember what the whole season's about anyway. It's about caring and sharing, or commercialism, if you want to look at it from that side. But really the objective is to love your fellow man, take care of each other out there, folks. It's this time of season where want is felt the most. So if you can share and help out some fellow people along the way, please do so. Be kind to one another, and I will see you guys next week. Have a wonderful weekend, and take care. During the holiday seasons, brokers can play against customers. ICT said, oh yeah, if you're trading, especially MT5, the old MT4, and you got brokers that are still sitting on there, you'll see their spreads opening up all the time, just to take people out. So if you're trading these markets in this time of year, be super careful and be just demo balling it. This is a great time to practice and to endure looking at this. Because when you're looking at these markets, you need to know what you don't want to be in. As much as you want to say, well, I've got to find a trade. That's addiction, man. That's like, yeah, you don't have to find a trade. Wait. Patience. You've got to develop patience over time. So if you find this kind of choppy days like this, remember them and say, I don't want to be in that. I don't want to be anywhere near that. Oil wasn't so bad. Oil gave us a nice clean setup. It was short and sweet. Look at that. See, took it out. Eventually would have taken it out. So we have an impulse leg here, return to go long. So that low was the low. So we have this impulse leg, return to here. So I like this down close candle. You want to see that stay open. These three here, not a breaker. So that high right there that dips down into there, you'd like to see that kind of stay open just because it's a bit choppy. But if it comes back and visits here, stop loss goes right there, really tight for a run above that high. and then that high, and then look for this fair value gap over here. It's coming in there right now. So that would be a long, potentially for here and here. Cut some out here. Stop loss tight. That's your entry there. Anyway, that's all I'm giving you. And keep an eye on that now. And like I say, when you start to lose, when you take that high out, suck your stop loss right up to break even, just because you don't want it to come back down into here again now. I want to see it blow right through this thing, right through the mean threshold of that candle, rejection block, and get up and on top of that. See little tiny candles. I don't like those. I want to see it go, go, go. You could have this tap one more time to the bottom of that fair value gap, because the mean threshold has just been hit. It's going to tap the bottom of that. Look for that order block. If that order block doesn't get hit, and that continues up from here, again, stop losses, pulling, suck them in tight once you start breaking these objectives. Don't let it sit long, because that'll turn around and come back on you, as it did on us here. So nibble your bit of profits out. So there's your fill of the fair value gap, coming back into the order block. If you lose the threshold, then you're back into this sweep these highs, come back to take out these lows. So look for that threshold to hold price now. That's what you want, a nice candle to leave you in this area. Anyway, I'm done. 9:03. All the best. You guys take care. Have a wonderful Merry Christmas. Love you all. And all the best for the holiday season. I'll see you guys again on Monday.